Our weekly Market Monitor guest tonight says the good news for investors is that the stock market has gone through its correction. That's one reason why he is positive on the outlook for stocks for the rest of the year. Welcome back, Howard Ward, Chief Investment Officer of Growth and Equities at the Gabelli Funds. Howard, always good to see you.
Nice to be here, Tyler. Thank you.
Terrific. Make your argument as to why the second half of the year, maybe not as good as the first half with double-digit gains for the Dow, the S&P, and NASDAQ, but nevertheless a good one.
Well, we had a positive earnings surprise in the first quarter of this year with earnings up 5%. We think more is in store for the second quarter. We think this particular quarter will be the weakest quarter of the year, but we still think we'll see upside earnings surprises and then an acceleration in growth for the balance of the year. So really, it's going to be positive earnings surprises driving stocks to new highs this summer and perhaps to 1740 or higher by year end.
Howard, we're going to do something different tonight. As you know, we asked our viewers to give us their stock questions, and we got lots of them, and we got a lot of them on Micron Technology. Wayne from Texas sort of asked the drift of it. As a former employee and Micron Technology loyalist, I'm interested in why MU has a 6-month run-up from the $6 range to $13. What's driving the stock?
Well, you know, this is one of the leading domestic producers of memory chips, which is very much a commodity-like business, but there's been some suppliers have fallen out of that business in recent years. Business is good. Micron reported a very good quarter a little over a week ago. Good top line, good bottom line, good margins. So that's the good news. The bad news is this stock has more than doubled so far this year. It's a notoriously volatile business. I would really take my cue here from the insiders. And the insiders, I'm afraid, have been selling. There was a flurry of selling around $10 a share in early April, another flurry of selling in early June at $12 and $13 a share. Stock's now $14 a share. I'd rather be a seller and take my chips off the table here.
Very interesting analysis, Howard. That's great. Nick in California wants to know about true luxury stocks. Don't want to know about the false ones. Wants to know about true ones like Tiffany. Stocks with gross margins in the 60 to 70% range, net profits in the 20% range that don't discount their goods. What do you think of luxury like Tiffany? Well,
Tiffany really is one of the true jewels, so to speak, in the luxury retailing business. And consumer net worth has recovered to pre-recession levels, and the high-end consumer is back, both here as well as in Japan. We saw that in the first quarter numbers for Tiffany, which were very good. I have an $82 price target on the stock, which would be about 12 times earnings. I'm a long-time owner of Tiffany. I think it's a great long-term investment for people.
All right, let's see if we can squeeze in this one from Brian. He'd like to hear about a stock that's related to a positive area of the economy, housing, a USG. This is the old United States Gypsum. What do you think, Howard?
Well, as you said, they make gypsum wallboard and other housing materials for building. This company has actually been through bankruptcy twice in the last 25 years. It's had a lot of litigation associated with it in the past. That gives me reason to hesitate to recommend it. But, and this is a big but, Berkshire Hathaway owns 15% of this company. They made that investment in 2000. I don't know whether they're going to buy any more or not, but that's a pretty good endorsement for some pretty savvy investors. They undoubtedly know this company better than I do. There are cleaner ways to play housing, however. Home builder stocks like Lennar or KB or Toll Brothers might be more appropriate for some people.
Let's get about a 15-second comment on Priceline, another one of your favorites, not one that necessarily was on the viewers' minds. The stock was trading about $813 a share when you mentioned it in May. Now it's at $825. You still like it?
Yes, conviction for Priceline has grown greater as consumer confidence continues to rise now to a 5-year high. So this company could sell at 25 times earnings by the end of this year. That would give you a stock price of around $1,000. So it's a mid 20% grower. 25 times earnings would be quite appropriate. I think it's full steam ahead for Priceline.
Howard, thanks for answering our viewers' questions this week, and thanks to the viewers for sending them in. We'll see you again soon.
Thank you very much.
All right, Howard Ward is Chief Investment Officer at Gabelli Funds.